Good morning. It is Monday, December 29, 2014. UPBOptionmillionaires.com. Only a couple trading sessions left in 2014, and then it'll be a brand new year. If you remember last year, we started off just about at record highs and pulled back at the start of the year. We'll see if that happens again this year. We are pulling back here overnight. Stock futures falling, some more turmoil in Greece. You can see this plunge lower. We've recovered those losses. We'll see maybe if we ultimately get down to that about into the first hour of the trading session before we recover and head to new highs, which is what's happened every single dip along the way. I'm going to just pull up a 20-year chart. Just look at this beautiful breakout we've had from consolidation. If you look at this and you just picture this as a one-year chart, I mean, that's beautiful, isn't it? You've got this wonderful channel, consolidation. We hit it the third time and have just broken out. And the trend has been, look at this, just perfect. It's the SP 500. We have the Abenomics trend line. The last 2 years has been virtually perfect as far as holding up the market. Although recently we broke through it on 2 occasions, although this dip was a little less pronounced than this one. But the recovery was significantly more impressive. We have that move up. You can see this wick here of this candle. I pull up a little closer, and I think ultimately we're going to head up to that level. You can see how it really coincides with this channel. If let me see if I can extend that. There you go. If you extend it, look at that. That's beautiful. And that trend line goes all the way back many, many years. So, yeah, the computers know what they're doing when they spike a stock or an ETF higher, 3%, 200 million plus of erroneous trades. But maybe not so erroneous. I think over the next couple of weeks, we'll probably see the market head up to that level. And that trade won't look so stupid. Let's get into some individual names here. I'm going to bring this up here. I posted Option Millionaires, but I love FEYE here. And you see the move off at 28. Back in the summer, right here, back in the summer is a massive trade at the $28 level. I think it was this wick right here, this candle and this volume right here was that $28 support level that held. And we briefly broke below it in the fall. Tried to break below it again here in December, and now we have this beautiful bull flag. This is a beautiful bull flag here. Been consolidating really the last 4 sessions after spiking up. I think it's going to head in the short term. It's going to be a quick move to the upside for FEYE. I think it's going to hit, let me just get it in. It's going to hit 40 bucks. Let me just pull in and I'll show you. There you go. 40 bucks. Ultimately, top side resistance is going to be $45. And if you look, I mean, where we were back earlier last year and where we are now, I think this company is more relevant now than it was back then with all of the breaches we have overnight, Twitter falling, and outages with Android devices and desktop users. They're not blaming that on a hack, but we're seeing PlayStation Network, Xbox, Amazon getting hacked. The anonymous hackers are releasing credit card info and password and IDs. It's getting pretty nasty out there. So this is a stock that I think is going to really perform well into 2015 and beyond. And we'll see the first step will be getting up to this level here and then ultimately breaking through it. So that's one to watch. Also DDD, I brought this up on Friday at the blog at optionmillionaires.com. Similar kind of chart. We have this beautiful topping pattern. We finally come down to support and we are bouncing. Look at this candle on Friday was up, what, 6-7% to 3D stocks, and I look for a move back over 40 for DDD. Another one I'm watching, similar type of chart, Yelp. Off support here. Look at this. The third time could be the charm here. I think we're going to move back up to the $65 level. And we've seen it in the past. I mean, some very violent moves to the upside for Yelp. So the last time it hit this level, look back in May of 2014, significant move from 50 to almost $90 a share, and then ultimately $92.50, something like that, before pulling back. So we could be looking at another 35-40% of short-term upside here. I'm looking for the first level here for Yelp, $65. Amazon, also great trade. I talked about this last week when it was at 301. I said it was going to head to 310 this week. This previous week it did. It's pulling back here a little bit overnight. With the stock futures, you see it went over 310 on Friday, pulled back. And I love this for a move up. And if you could see the chart, I have the next line in the sand here. Analysts came out this morning, reiterated the $400 target. So I think ultimately over the next 3 to 6 months, it's going to head back up to this level here. Once it breaks that, we'll be back into the 400s for Amazon. Manitowoc icon out this morning, wants to split up the company. Because look at this. I had this channel up. You can see now we have broken above that 23.25, so this could be one to watch. And you see when Carl Icahn, for instance, Apple and Netflix gets into something, it usually goes a lot higher. Even in spite of the initial first day spike, maybe we'll consolidate, but it's going to go a lot higher. So like HLF, remember we first got into HLF, it was in the 30s, it moved up, ultimately hit 82. It has been failing significantly, and I think Ackman's going to be proven right in this trade. You can see heading back to that level down at 20. At the start of this year, I talked about NUS when it was 140 bucks, right up here, and you can see the move it's had to the downside. So charts do matter, and you see weakness, HLF, NUS. I think these are going to continue to be weak into 2015. Caterpillar, again, right here, $95. I brought this up, StockTwits. I put it at the blog at Option Millionaires. This is the level here that I think we're going to stop at, and we're going to continue to the downside. Now, it might get a little big brother push forward with the Manitowoc move to the upside, so we'll see here short term. We might get a pop pre-market. I'll need to see where we're at here. It is a couple hours. We're about an hour and a half before the market's going to open, and Caterpillar doesn't look like it's going to open higher. So I think we might have seen the top here for Caterpillar, and I'm looking for a move back under 90 bucks into 2015. I'm not sure we're going to get back into triple digits for quite a while. On Caterpillar, let's look at USO, because USO tracks oil. I'm looking for a move back up to the 2250 level before we possibly kiss lower. And again, with crude oil, looks like it's flagging here. But if you pull up a long-term crude oil futures chart and just draw a trend line across, we're right at support. And also, if you look, it looks like we're bottoming here. Although what you would also something that's of interest as we've pulled back, we're putting in lower highs here. You see each of these spikes to the upside are getting less and less and less violent to the upside. They're starting to get sold off quicker. So we might get a move up to 56 here. But if we don't hold this level, especially the low we hit last week and a half ago, this is going to look pretty bearish. Now, this is what I would call a bear flag. You can see this is somewhat of a flagpole, a tilted flagpole, but you can see the flagging pattern here. And again, the lower highs that we're making, if we do break this level, we could be looking at 50 and then 45. The irony of it all is back in June of this year, the analysts were looking for higher prices. We had the conflict in the Middle East that was supposed to get crude oil back up to the 140, 150 level. Remember back before the financial crisis, just before financial crisis, oil was trading at significantly higher prices and then just completely collapsed. We're getting a collapse here. The question is, where does it stop? The analysts, when it was at 106 back earlier this year, were saying it was going to go higher. Now it's gone lower, and everybody's talking about crude oil going to 20 bucks a barrel. So you got me. I would say this, some great pieces out this weekend talking about crude oil and the amount of jobs that the shale industry has created over the last 3 to 4 years, that those jobs are being cut now. As the price in oil declines, it's not profitable anymore for some companies to extract oil. So let's look at a couple more charts. I'm going to look at GoPro because it's been a really volatile trade. Everybody was talking about the lockup and how this was going to take the stock lower, and look what happened last week. Huge spike from 55, almost a $15 spike. It's down almost 2% this morning. And you can see this nice move we had up the last 4 trading sessions, really, all last week. It looks like it's possibly pulling back here. Maybe we'll get a move down to the 65, which would work if you pull a trend line across. That would act as support. And if this is going to mark a bottom from the highs we saw in October, that would be where the line in the sand would be drawn there at 65. So we can hold that level. That's going to look bullish for the short and medium term, especially into 2015, where we could possibly get back up to levels we saw almost $100. And we'll look at Alibaba, which has only been trading for the last 4 months. You can see it's been flagging here, consolidation, and it's been holding at 105. This is something I possibly look to get into for calls for a move to the upside, as well as Yahoo. I bought the 50 calls last week at 50 cents. Look where it closed, 50.50. Actually, it didn't close that. Excuse me. This is the pre-market, the first trade of the pre-market. You can see to me it looks like it's flagging here as well. Let me see if I can extend this. And I think Yahoo is going to spike up to the $60 level. I got these last week. I was able to sell out at 85 cents. I got them at 50 cents. The $50 calls. Excuse me. I put them up at the blog and private Twitter, but you can see the spike up we had on Thursday Wednesday, there was the holiday shortened day, and then again on Friday, up to over 51 before consolidating. All right, UPB, I'll see you in the chat room at optionmillionaires.com. The year is winding down quickly. Stock futures, let's look at crude oil futures are up 1.3% this morning. Stock futures are up, down almost 0.2%, and we'll see if we can get that opening swoon that swiftly gets bought and we can grind up into positive territory today. Something to keep an eye on would be the dollar index as well, which continues to head to levels we haven't seen. You look at a move up, we have over 90. That seems to be where the market's going to trade the US dollar. You can see it back over to levels you haven't seen since 2006. You remember quantitative easing was started back in 2008 and 2009, March 2009. Everybody thought the US dollar was going to be toilet paper, and yet it has recovered its value and then some. And again, just like gold, silver, and oil continues to defy everybody expecting the US dollar to do one thing. It does the exact opposite. Just like this market, everybody thought this market was going to fall. Every headwind along the way. All right, UBB, I'll see you in the chat room. Everyone have a great trading session. Bye.